you've got monetary policy. You know, we've had the 3 cuts from the Fed during the course of this year, but we need more. As he said, we need more than monetary policy. We need fiscal. We need reform in order to sort of go above our sort of 2% average. But 2% is the general level that I think most people are assuming the U.S. economy will expand at this year and early next year. The risk would be if it comes sub 2% in the latter part of this year or the early part of next year, then we're going to have to start seeing new momentum and new sort of stimulus coming in away from monetary policy. But I agree that monetary policy can only do so much work.
How much of a drag do you think are we seeing from these U.S. China trade talks, specifically for the Americans?
I mean, we've seen a huge drag in terms of the performance of Chinese equities during the course of this year. That started to recover a little bit, and we've seen sort of that normalisation. But yes, it's a drag on sentiment not only in the US but more globally, and I think it's the central pivot point to investor sentiment around the globe. We're trading off positive and negative headlines. As we say, we're slightly more positive today on the back of this idea that we're getting close, but perhaps there'll be a headline tomorrow suggesting that we're not quite so close, in which case we'll trade off again across risk assets.
Or a new tweet. Maddie has a question.
Exactly.
Well, yeah, that's what I was going to ask. Do you believe the president when he says they are in the final throes of getting this thing done? Because it appears as though they've really been in the final throes for, I don't know, the last 6 months.
Yeah, but you can only play what's in front of you, I guess, at the end of the day, Matt. So, we go with what he says. I think you take most of that with a pinch of salt these days, whether it's sort of directly from him or through his Twitter account. But, as I say, we have to play with the news that we're given. And that's why the markets become so volatile, because the headlines do tend to vary, and we're bouncing and being buffeted around on the back of that.
Markets continue to plumb fresh record highs stateside. Do you think that when we finally do see this thing emerge, markets are going to be perhaps a little bit disappointed? Really, markets sitting on the edge of the seat waiting for this thing to be done. But when all is said and done, do you think that we could see some disappointment out there?
Well, I think at the end of the day, it's still going to be a long process, even when, you get an agreement. But I think there'll be a relief rally in the first instance when that phase 1 is officially signed. And you've seen the reaction in the market over the last few months with positive and negative headlines. You saw, when we were first talking about the phase 1 deal several weeks ago, the swing in the 10-year yield from the mid-150s up to 170. It shows you the sort of nervousness that's priced into the rate space on the back of that uncertainty on global trade, particularly U.S. China.
How much leeway do you think the president really has here? Because especially since these pro-democracy victories in those local elections in Hong Kong, and we've seen that bipartisan approach from Congress pushing back there against the Chinese government in Beijing. How far can he kick that can?
Well, he's going to kick it as far as he can, and as sort of in terms of his spoken word, but the impact is actually coming through onto the US economy as well. So if you see the correlation between revenues from tariffs and CPI, we know what Trump thinks about the Fed and the bias towards perhaps tightening rates again. He certainly doesn't want that, but there's a very positive correlation. So he can't push it too far because he's only going to drive inflation into the US domestic economy at a time when surely he's now going to be thinking about sort of re-election prospects, or at least his campaign.
Absolutely.
Over the course of the next 12 months.
And can he really afford to have trouble on the Asian side of the world when he's even got trouble back at home? We're not just talking about election 2020. We've got NAFTA folks headed to the White House later today.
Absolutely.
I mean, this is a bigger question about policy.
Policy and his legacy.
Yeah.
And the last thing he wants to do is trigger something that's far more negative, far more sinister. So he's going to be very cautious of what he's doing. And as you say, you've got the backdrop of Hong Kong, mainland versus Hong Kong, versus the domestic policy that he's looking at in the US. He's treading a fine line, but he doesn't always tread lightly.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.